Hello, Dr. L here. This video will show you an example of energy field trading. This first chart is the daily chart of the SP500. This drop right over here was the Brexit surprise, the corresponding rebound rally, and then we came up here for a couple months of a flat market. This green line is an XGO energy forecast for the SP500, shifted to the left 6 trading days. I found that fits prices pretty well. The Brexit was a surprise. It was a man-made event, not a natural event. But the energy field said right in here it was going up, and did come up. Here's the dip. This dip is right here. Energy is simply a calculation of energy. It is not made from any price data. It is totally independent of energy. It can be computed for any time in the future. The price you pay for this is that the scaling between price and energy is not perfect, and it has to be adjusted. But what is good about an energy forecast is it helps you get your timing. Timing is everything for profits. Okay, this low right here came up, and this suggested a stalling out action. Right in here we had a pretty good fit. What I do is I adjust the scaling on the energy curve to get a fit. Right in here it said we're going up higher. We did not get that. That's a warning that something's not quite right. The range is really compressed in here. Right in here we got a good little fit. And this big bar right here was very significant because that was a wild Friday. And then the next week we got a good fit in here. And then we had a long holiday in here. And then on this week, this bar is Thursday. It started down. Hard to see the detail, but that said that this little part right in here was close to a fit between the closing balls here. We're down some, so looking for it down here. Why is that important? Because energy has a big down here, much bigger than the movements in here. So simple energy field calculation. An XGO energy chart you can buy on my moneytide.com website for $36. You have to be able to plot it and shift it if you want a chart exactly like this. But this is saying, look out, this long stall could break down. Well, what happened? Here's what happened. Boom. Big down day. I call this a hammer down day. There's the closing point. Right in the energy field. Now, personally, I was in a swing trade. I sold on this bar. I took some off, about a third off, about halfway down this bar here. And I'm hoping that the rest of this energy forecast is accurate. But look here, the energy forecast shows a good bounce. Right in here is the Federal Reserve meeting. It was in the energy field. Suddenly the market's down. It must be explained, and the explanation is that there's a fear that the Fed will raise interest rates. So that kind of fits in the pattern, but it's always in the energy field first. Here's a little close-up of that down day. This is a chart which shows actually 1 minute sample data plotted very closely. This is 1, 2, 3, 4, 5, 6, 7, 8, 9-day chart, and this is a forced rollover contract. This is the September contract right in here. This was the lunar eclipse. It got a sharp drop there, but it came back right up. Big up move on the second, but then I went flat. Little knots on the 6th, Monday, Tuesday kind of flat. Thursday was contract rollover day. I've often noticed that when the contracts roll over, that the new contract, which in this case was about 5 points difference, so that 5-point difference is the real drop. But then early in the day, on Thursday, this market came down. My sell point was right in here about 2171.4 in multiple contracts. I just held my stop here. These diagonal lines are moon flux lines. What I was seeing in here was this channel right in here coming down. Here's a moving average crossover. So I sold in there. I held my stop at 78 overnight. Woke up and found out that the market was going down. And by the time it came time for me to do my chaos clinic, day trading was not in the cards. This is swing traders day. The market dropped like a rock, but I want to show you that you can see the moon flux lines, but there's another, and those are just flux lines that show you where the electromagnetic field is. Now there's this channel here, but on my daytradingforecast.com website, I show something called red swans and green swans. These are a set of flux lines that I found after much research are always involved in big up days and big down days. So this is the chart in a simplified form of the chart I was actually watching. This is on the 9th. The times here are Eastern time. So Eastern midnight. This chart actually starts at midnight Greenwich time. Very flat overnight. These are what I call the red swan and green swans. With the properly set spacing, they form this energy grid. When we started down right here, by the time we got to the outcry open, we had started down here, and from my sell point around 72, we were already down 60, 57. On the Chaos Clinic, I did have a sell at 56, took 5 points and got out as a day trade with one contract. That's about all you can do. I was totally distracted trying to do a day trader's Chaos Clinic because that was not a day trader's day. This was the day for swing traders. Sit and watch this. Now my secret weapon was that I knew that this flux line could probably hold all day. And indeed it did. We ran down here. That is energy field trading at its finest. So, that's what happened in this big swan dive. It was a red swan dive. A red is a black swan going down. green is the black swan going up. If you read about black swans, they are the outliers in performance. Those outliers can be predicted. They are all in the energy field. A simple way you can do this is go spend $36 and order an Exco chart and watch it. For any stock or commodity, watch your own as well. So that's it for now. Hope you enjoyed the video, and hope you come to my website and buy something.